Banks declare war on the credit card stacking industry. If you offer credit card stacking as a product, or if you're a client that have received credit card stacking in the past, or you're thinking about getting into credit card stacking, you want to watch this video. I'm going to tell you exactly what the different changes are going on in this industry and exactly what you need to do in order to make sure that you take care of yourself moving forward. If you have gotten credit card stacking in the past, if you do offer credit stacking as a product, in my opinion, I still think this is one of the best ways to get funding for a startup or even an established business, because there's nowhere out there that you can go out and get $50, $150, or even $200,000 at 0% funding that you can quickly deploy for your business, even as a startup, because there's no documentation that is required, there's no time in business required, there's no industry restrictions, and also in addition to that, there's no restrictions on use of funds, and they generally come with 0% interest for an introductory period of time. So it really allows you as a startup business to focus on turning your business into a profitable business. And it also allows you as an established business, of course, to get quick access to cash that you can use at any time. Because again, you have continuous access with these lines of credit. But this is a product that's been out there for a long time, but the misuse of this product has caused the banks to basically have to make these changes. And I'm with them, because if you go on Instagram, Facebook, TikTok, everybody's basically considering themselves an expert as it pertains to credit card stacking. Everybody's saying that they can get you, $50, $150. I've seen $500,000. Let's mention the abuse that's causing these banks to fight back, and I understand why they're fighting back. The inflated projections that people are using, the fake income, VPN submissions that, of course, when you're talking about combating fraud, one of the major and fastest growing crimes, you have to be concerned when you're talking about these VPN submissions. And we're gonna talk about here in just a second why we've used VPNs. I've used VPNs as far as when it comes to submitting applications. We don't do any fraud. And by the way, we are still offering this as a product. It is an amazing product. On your screen here, basically, I want you to add some of the approvals editor that we've gotten some of our clients just within the last recent months. You're gonna see some of the different approvals from $25,000, $50,000, $5,000, $10,000. So this is something that you want to learn how to get your clients to do it the right way. There's going to be a link in the description on how we can work together and teach you how to offer this product to your clients. Or if you're interested in obtaining some lines of credit for your business, there's going to be a way that you can submit an application and we can work together to help you get these 0% money here. But the manipulation and underwriting, the loopholes, the increase in defaults as well. This is the one major thing that has really pushed them into making sure that they crack down on all these, fraudulent things that have been happening here. So some of the different changes that the banks have made, are number one, they're tightening up on the application submission controls, meaning that those VPN, if you're still offering business credit cards and are submitting through a VPN, I don't know what you're doing. The VPN stuff does not work anymore, okay? Sometimes to a degree, and let's slow it down for a second so I can make it make sense, because sometimes maybe I might be speaking gibberish to maybe people that are not they're not internally connected with what's going on with what I'm talking about. Now that since you understand the product, let's talk about how we usually submit applications on behalf of clients. Unlike real estate, unlike revenue-based loans, which there's a direct relationship with the lender, with credit card stacking, they can or cannot be a direct relationship with the lender. Let me make it make sense. If there is a direct relationship with the lender, which we do, we have connections with lenders out there that we have somebody that we share that our client's customer information, and that lender reaches out to the client directly. There is no broker relationship here, okay? They reach out to that client directly, that client submits an application to the lender, and it's client to the lender. And what we do is we coach our clients and let them know how to handle that call, how to expect the call, and everything to go through that whole conversation. We do the pre-underwriting. That's one way on how to submit the applications. The other way on how to submit applications, what we used to do is we used to use VPNs, where we just go to that client's specific state and submit it. We have done even proxy browsers, where it's a much cleaner browser. I don't want to get technical here. You want to Google it up, what a proxy browser is. We found the most effective way to establish relationships, where you just make that introduction with the client. There's ways where we've contacted the client on a manual way where we call them over the phone and we walk them through the application process. That's another way to make sure that we protect how that application is delivered to the lender. So there is no VPN, there is no, nothing funny or anything like that. But this is all honest business. Everything that we're doing is all honest. There's no phony stuff. And what the lender is trying to step away from is the people that are doing the phony stuff. So those are the 3 different ways in how an application is submitted. Directly with the contact that you have, maybe using a proxy server, okay? And then lastly is with the client over the phone and walk them through the application so it's delivered through a clean VPN. Those are the only 3 options. So what are the lenders doing to tighten up this application process that we've been basically practicing for so long? Number 1, you can't use VPNs, as I said. Lenders are tracking the IP addresses. They're tracking even beyond the IP address. I think the MAC addresses, if I'm not mistaken, and they're just not, they're not using it. They've enhanced fraud detections. They're taking pictures with the camera. If the camera is on, you might not notice it, but they are taking pictures of the camera. They're really monitoring how long somebody's within a specific site. They're doing so much. In addition to that, that takes care of how the number 1 way where we used to submit the applications as far as with the VPNs. Number 2, as far as using some of the agents, these agents, some of them are getting in trouble. Some of them, the lenders are starting to put a policy that they're only restricted to serve clients in their respective states. As a business credit card stacking broker, you have clients in numerous states. So if you have a contact with Chase who lives in California, he's going to tell you, and you probably heard this before, you know what I'm talking about if you offer credit card stacking. He's going to tell you that I can only help you with California clients because they're hunting down on it, okay? So that's one way that they prevented that. The one way they still can't prevent is you helping your clients and walking them through the applications as far as the application process is concerned. As far as the projections is concerned, lenders know that people are using fake projections. They've been known this for a long time. I've made a video about this, that people are using projections, stated income, pro formas, whatever you want to call it. Now, they're combating this way, okay? And this is the scary part, especially if you use projections. Because I want you to know, the lenders could easily verify the income by requiring the client to sign a 4506T, but they're not. They're just simply asking you to state it. If you make your payments on time, if you do not default on your credit line, you're gonna be fine, okay? So if you're a consumer out there and you're scared because somebody used projected income on your applications, you're gonna be just fine as long as you make your payments on time. But what it comes down to is if those projections were truly highly inflated, just crazy stupid, you might get in trouble with, they might audit that account and request some additional documents maybe to prove your income and whatever it is. So what I suggest you do is just don't inflate them too crazy, but let the lenders also know. I'm letting all my clients know these are projections, as we've always had. Let them know if they're comfortable with using the projections, great. And we also let the lenders know when we're submitting the applications, especially when the lender contacts the clients. We let them know that these are projections. The business, the business has just started. We provide all the documentation if that's the situation. But as far as just strictly lying on the application, that's something that you want to stay away from. They have banks are also sharing information amongst each other. There's some kind of an underground data sharing, which we're really unaware of, but I know that this is happening where they see, because one of the tricks behind credit card stacking is you want to make sure that you submit an application here with this bank that pulls from this credit bureau, and then you go to this bank that pulls from this credit bureau and submit an application here, and so forth and so on. But now they're really having an internal lenders sharing database, which I don't even know if it's legal or illegal yet, but but as it pertains to the business funding, I think it could be legal because it stretches the side of the business, not the personal. So it's not in the eyes of the Fair Credit Reporting Act, if you understand what I'm saying. But this is something that they're doing. In addition to that, lastly, they're using FICO SBS. Okay, FICO SBS is, if you don't know what it is, it's commonly used FICO business scoring, scoring model that basically breaks down exactly, what your business, your business and personal credit score strengths are. FICO SBS, if you don't know what that stands for, FICO SBS stands for Small Business FICO Scoring Service. And I'm gonna explain to you the 5 factors that affect your FICO SBS. And this is something that they're actually breaking down before you even, they make the final decision. As soon as you submit the application, and I'm gonna break down exactly what they evaluate. Where are my notes here real quick? Let's get back to this section here, and let's look at this section here. So the 5 things that make up your FICO SBS is 35% of your FICO SBS score is based on your personal credit score. So, a big part of your business credit card application is still affected by your personal credit score, up to 35%. 30% is based on your business financials. If your business has been in business for some time, your bank rating, your debt to income ratio, your debt to service ratio, your NSFs, your tax returns, your account receivable and aging report as well. 20% is based on your business profile. We're talking about your industry, your time in business, your web presence, your business address, things like that. 15% is based on your business credit profile. As far as your profile with Dun & Bradstreet, which is 5%, Experian Business, which is 5%, and lastly, Equifax Business, which is 5%. That's what makes up your FICO SBSS score that you need to be aware of, okay? And they're taking a look at that there. And the cool thing about the FICO SBS scores that a lot of people don't really understand is the lender gets to have their prerogative as to how they want it to be evaluated, how they want it to be stacked, and what should they take more serious than other things. Should they take their personal credit more important than other credit, and they get to choose which bureau that they pull from? Some of them will pull from all 3, some of them will not pull from all 3, some of them will look at only the middle score, some of them will decide how much weight that they want to put on the industry, because some of them are focused more on high risk industries. Some of the lenders it depends on the lender's appetite is basically the point here. But definitely something that they're looking at. So the 4 major things that I want you to know, the 4 major changes that have happened. I hope you're taking notes, okay? Like, subscribe, all of that good stuff, especially if you're in the industry and you appreciate this free, knowledge that I'm giving you here. The 4 major thing is they've tightened up on applications, stop doing VPNs, completely stop doing VPNs, focus more on establishing relationship with lenders, which if you get into our course, we will help you establish this relationship with lenders if you intend to build your own agency. Focus on that. That's what's really big these days, okay? In addition to that, focus on helping your clients submit those applications by phone or walking them through it, doing a Zoom conference. That's what's really doing it these days, because you have that clean IP address. Focus on having reasonable projections. Sometimes use actual income more than those projections. Don't have the stupid, highly inflated projections. It doesn't make any sense. The lenders know what the hell is going on, okay? They just really do. And especially if they have some previous history with that borrower, and then you come out here with these insane projections, it just doesn't really make any sense. Another thing is, know that there's some data underground sharing. So the inquiry manipulation game doesn't really happen as good as it used to anymore. I'm still doing some research on that. There's going to be some updates on that software or program that these lenders are using. In addition to that, focus on, understand that they're using FICO SBS, a custom scoring model that the lender decides how they want to stack up, what factors or, that they want to use or put emphasis on based on, their risk model, based on their risk appetite. So anyway, what do I want you, what are the takeaways? I want you to take away first off that credit card stacking is an amazing product. I love it. I love the structure of it. From a lender's perspective, I can see why they came up with such a product. It's highly profitable for them, clearly. Interest rates are high. It gives, from a consumer standpoint or a business owner standpoint, it gives you a very easy way for you to get into business by giving you some capital to get started. The way it's positioned, where you have the 0% there, it's just really nicely, beautifully done, where you can focus on actually turning your business into a profitable business before instead of just focusing on servicing the debt, because most businesses fail because of lack of capital. Credit card stacking gives you the ability to only pay on what you use, because most businesses don't even know how much money that they need. But anyway, if you want to work with consultants that actually understand these products, and really can guide you through what you need to do and can just be there by your side to help your business grow, there's going to be a link in the description. Fill out a quick application, get me on the phone, and let me evaluate your situation. I believe every business needs to have access to business credit cards. They're a very useful product. I think as a business loan broker, as a credit repair agent, you need to offer business credit card stacking as a product and do it the right way. Let's keep the industry clean. But anyway, that's basically the video for today. Comment, share, like, subscribe, all that YouTube stuff. I appreciate you, and you have a good rest of your day.